breakout trading is one of the most popular strategies out there, and most people like breakouts, and I think they work very well because I've used them and I know that they really do work. But there's a problem that I almost go through, and I know that most people go through those problems too. The problem is fake outs or fake breakouts. When you get into the market like this one right here, and then after a few moments of entering the trade, you see the market rolling back into the zone and hitting up your stop loss. Because when you see a breakout like this, you'll be thinking, of course, the market have touched once, two times, three times, and now it's the breakout, because you see this candle closing below this range, and then you will be selling here, and then a few moments later you see the market moving back into the zone and hitting up your stop loss. So in this video I will show you a few tips that you can use that can help you to avoid these fake breakouts in your trading. But before we get started, I want to let you know that there's no way that you can 100% avoid fake breakouts, because the market is always giving you a 50-50 chance of either winning or losing. So it's up to you to choose the best strategy that works for you. But there is no point that you are going to avoid fake outs or fake breakouts 100% of the time. So today I just want to give you a few tips that you can use so that you can minimize your chances of getting caught by fake breakouts. And also, if you stick with me until the end of this video, I will show you a secret indicator that you can use also to get high probability trades on your breakout. So make sure you stick with me until the end of this video. So let's start off with why fake breakouts happens in the market, right? So fake breakouts happens really because of two things, right? Number one, the market can go anywhere at any point. You have to understand that, and there's no way that you can avoid that as a trader. So I'm not going to talk about that. Then the number two is, for most people, they get caught by fake breakouts simply because they are not fake breakouts, but you as a trader, you are drawing your support and resistance at the wrong point, right? So what do I mean by this? So what I mean is, let's say you get into this market right here and you were seeing your support and resistance like this. So if you draw your support and resistance like this right here, if you draw your support and resistance as a line like this, it simply means when the market comes back under that line, you will be thinking that this is a breakout, but seriously, this is not a breakout. This is the market coming back into a zone here and then reversing back up, right? So if you draw your support and resistance as a line, there is more chances that you are going to get caught by fake breakouts, rather than if you just come and draw your support and resistance as a zone, which means you know that this is not a line. This is a zone where the market is likely to reverse on, or is likely to break out on that zone right here. But if you understand that this is a zone, then chances are you are not going to get into the trades too early, because you know that this is a zone, this is not a line. So the second tip that I want to give you, which is the most important one here, is when you are trying to trade breakouts, do not trade breakouts that have huge momentum behind, right? So stop chasing parabolic moves. So what is a parabolic move? It is a move that moves strongly into one direction without any pullbacks. So I'm going to give you an example here. If you pay attention here, you can see that this move right here, from here to here, there is a lot of huge red candles and there is no green candles to support the buyers in this manner. So there is a strong selling momentum in this point, and most of the time when you see the market having a strong momentum and getting into a zone, it is likely to reverse into that zone, rather than the market which goes into a zone is a market with balance between the buyers and sellers. So before I almost forgot to tell you guys, if this video doesn't sound as energetic as others, I'm not really feeling well today, but I just said I cannot go through all the day without creating the video for you. So I'm not really feeling fine, but still I'm just pushing, trying to make this video as good as possible. So help me like this video so that I can see that you also care about my health and some things like that, right? So as you can see, we have the market move making a very strong move into the into the zone here. And the reason why I say you should not trade a strong move like this into the zone is because there is no balance of flow between the orders, right? So what I mean is, when the market is making a very strong move like this into the upside, right, and there is no balance between buyers and sellers here, it simply means sooner, very very soon, the market should come back down. Why? Because the market always move in this manner right here. So when you see the market move making a very strong move, it means most of the time huge banks or market makers or whatever you call them, they are involved in that market. So they are taking much of the money right there with these sell orders, but they know that very soon they need to sell back that money so that the market can come back into to cover this gap here, because there's no balance or flow between buyers and sellers. So I hope you understand that. So for you to understand, most of the time I want you to look into the market. When you see a strong move moving into a zone here, when you reach that zone, if you have a strong move here, a momentum move, there's more chances that the market is about to reverse in from that zone. Why? Because there's no balance of buyers and sellers in this point right here. So this is exactly what happens here. You can see the market makes a strong move into this zone here, faked a breakout here. So most traders would have got caught in this breakout simply because they will say, okay, there is a strong momentum candle here, and then we have a breakout. So this strong momentum candle will help me to push prices down. But this is not what it really works like, right? Because when the market moves in a strong move like this and gets into a zone, it's likely to reverse from that zone. So you can see from here, the market moves down, it reverses because there was a strong move. Up here, the market reverses, there was a strong move. Here the market reverses because there was a strong move. And when the market doesn't have a strong move into the zone, then that market is likely to break out and move further down rather than the market which have a strong move behind it. So let me show you what I mean. Let's take a look at this market right here. The market moved into the zone with a very strong move. Why do I call this a very strong move? Because you can see there's no red candles from this point right there to this point right here, and then the market reverses from that zone. But in the second wave here, the market moved down here, the market started rejecting right there, and then you can see the market pulls back up again because there is now buyers into the market. So if the market breaks past here, there is going to be money that is there for the market makers to take here, because there are buyers here who are losing money. Because if you think about it, if we are all selling in the same market and no one is buying, then chances are the market is not going to continue going in that same direction. Why? Because there is now no balance, right? Because for a buyer to make money, there's need to be a seller who is losing money, and for a seller to make money, there need to be a buyer who is losing money. So as you can see here, the market pulls back, and then after the breakout, the market managed to move back, to move further down, simply because there is build up on this, right? Which is the third tip that I want to show. The next tip that I want to show you is only trade the breakout if you have a build up before the breakout to support that breakout trade, right? Because if you look at this, if you trade this breakout here, where do you put your stop loss, right? So let me delete this. Let's say I trade this breakout right there. I will put my stop loss above this zone right there, because I know that if this market is about to reverse, then there's chances that this zone also is going to help me to hold up my trades, and then the market might drop. But if you trade, let's say this fake breakout right there, so let's say you see the market moves up and breaking past this zone here, and then if you buy at this point here, where are you going to put your stop loss? Because if you put your stop loss anywhere near here, there is no way, there's no point, or there's no level which can support your stop loss, which means if the market drops, chances are it will drop up to this zone right there, right? So you would put your stop loss down there, which is a very bad risk to reward ratio from this point to this point right here. It's a very bad risk to reward ratio. But if I trade on a zone like this, if I sell here, I can put my stop loss right there, because I have a zone right there which can support my stop loss. So make sure you want to trade the market which have a build up before the breakout, so that way you can have two things: good risk to reward ratio. You can also have build up that builds the momentum for the trade to go down. So I'm gonna show you some examples of this, what I'm talking about. So if you look at this here, you can see that the market have been moving into this, forgive me. So you can see that the market have been moving into this zone here, and then reversing up into this zone, reversing up into this zone, trying to reversing up. But you can see that the more the market comes into this zone here, the smaller the pullback comes, right? And it shows that there is momentum. So which one is the build up here? You can see that here you had a big strong move here which came into the zone, and we have a reversal here. Also you have a big move which came into this zone, but when you came into this zone for the third time here, there was a long a strong build up here. There was a lot of candles here, which shows you that there is now build up. The market is building up the momentum to break out, right? So you want to also make sure that you see this. When you see this happening, right, you can see that next we have a breakout. So if we were selling at this point here, where's the next point to put our stop loss? Is the recent higher lows, right? So we see the market moving up like this, up like this, up like this, now building up and then breaking out. So I would put my stop loss at this point right here. So if I sell here, I'll put my stop loss right there, because for me, I don't like to put the stop loss too close to the entry, but I'll put my take profits away from the entry. And then you can see that the market breakout makes a pullback, and then this pullback was supported by our previous level here, and then later on we see the market dropping further down and down and down, right? So what I mean is this build up here is what helped you to get this move down. And also, if you have a breakout which have a build up first, you will be able to put your stop loss above that build up, and then if the market reverses, if it creates some kind of a fake breakout, this zone here is gonna help. This build up zone is going to help you to hold up so that the market doesn't go and hit your stop loss, and then the next thing you see is the market moving down. So all you wanted here was some patience to say, okay, this market, I'm gonna wait and then see what happens. Before we go, let me give you the secret indicator that is going to help you get better breakouts into this market and avoid those fake breakouts. So the secret indicator is not a secret indicator, of course, but it's the MACD indicator right here. So the MACD indicator, we use it in many ways, right? The MACD, we use it in many ways, but the main purpose of the MACD is to show you the momentum of the candle. So what I want to tell you, the secret is, do not trade the breakout if there is a huge momentum at that point, simply because huge momentum simply shows that there is one particular group of people who are dominating that market. It can be buyers and it can be sellers. So, and also if you trade breakouts with huge momentum, chances are the market will be swinging a lot, and then chances of the market coming back to your stop loss is very high. So if you look at this MACD, how do you measure the momentum? You use at the size. We use the size of the histogram. So this is called the histogram right there. So if there is big histograms here, you don't want to trade the breakout. For example, when you saw this breakout here, there was a huge a big histogram here which represent this momentum right there. So you want to avoid, right? So if you find that example which is right here, when you got a winning trade from a breakout right there, you can see that at this point right here, when the breakout happened at this point right here, we have very little momentum, right? The histogram is small, showing you that no one between the buyers and sellers is controlling that market at that point. So if the buyers manage to break out, they might move the market further up, and in this case, when the sellers broke out here, they managed to move prices further down simply because we had no momentum here. So when they got momentum, they managed to move price down very, very fast, because we have no much momentum in the market. So you want to chase the breakout that happens with less momentum in the market. For example, if you see this at this point right here, you can see that. Okay, let's do this so that you can see that we had the market here. We had the market moving up, down, and then you find a breakout, and then this breakout happens when you didn't have any momentum in the market at this point right here. So this was going to be a sell trade with you selling after this breakout candle here, and then you put your stop loss above at this point, above this momentum candle, and then the market moves down. But my point is here, you want to look also at the MACD. If you cannot read price action, if you can read price action, then it's okay for you. But if you cannot really read price action, you want to make sure that the breakout that you are trading a breakout where there is less momentum. Here you can see the market was in a range, and then there was less momentum. And why do I say there's less momentum? You can see the MACD is very small, the histogram here, and then you see a breakout, and then in this case here, you'd be very well suited to buy at this point. Put your stop loss below this level, and then you can get a winning trade. So of course, not all your trades are going to win, because I just chose these examples to just illustrate. So I cherry picked these ones, but this happens in the market over and over again. The biggest thing is, do not chase breakouts where there is huge momentum. So the MACD can help you. If you see the market in a range just like this, and then you see the MACD here without any momentum right there, you can see there's very small histogram here, and then here you can see there's build up before the breakout. So this build up is something that you want, because when you buy here, you can find where to put your stop loss, and also you can know that this zone here, which is a noisy zone, can help me hold up my trades. So when you get into the market for the next time, just go put if you are trying to trade this breakout, just go there, put on the MACD, and you will see that there will be when there is less momentum, and then the breakout happens after less momentum, you are going to get chances of getting winning trades. So for example, in this case, you can see the market was ranging at this point, and then there was no momentum on the MACD because the histogram is very small, and then you see a breakout. That's where you sell, because after the histogram spends most of the time being very small, then sooner or later the momentum is gonna come up, and then the histogram is gonna move like what happened here, and then you want to be here with this market when it moves like this. So if you like this video, I will leave a link on the description so that you can join our free Telegram group, and I'm going to be giving you trading ideas, free lessons, and also sometimes I drop signals in there. So make sure you join that Telegram right now, and I'll see you in the next one.